A very good afternoon, good morning. Welcome to Live Market Analysis with myself, Giles Coughlin, Chief Currency Analyst. A very warm welcome to you. I'm glad that you're able to be here today and looking forward to running us through the session. And of course, we are all about the focus on the Omicron variant, and I'm going to be running through what we need to look at, how markets are reacting, as well as the potential opportunities that are setting up from a medium-term perspective, and the headlines we'll need to keep an eye on. So, looking forward to the session. Just as folks are signing in, don't forget that any entries, exits, or different instruments we talk about, it's not trading advice. The whole idea of these webinars is you look over my shoulder, someone with a professional trading background, and that goes about helping you make trading decisions for yourself. It's not a signal trading service. The key things we'll be looking at today is be looking at the New Zealand dollar, Japanese yen. Particularly, we'll be looking at that on Wednesday, but we'll also look at that briefly today. We'll be looking at some of that yen weakness and whether that will lift New Zealand dollar yen into year end. I'll just show you that strong seasonal pattern. In fact, that'll be what we'll start with for the session. So do get ready for that in a minute. We'll also be looking at OPEC, what they're going to do about the latest oil actions. The US dollar, what the latest run high, can it continue? Gold, we'll be focusing on gold markets and what the latest drops in gold mean in terms of the medium-term perspective. And we're looking at non-farm payrolls will be important for Friday. Also the euro and global growth generally. So we've got a lot to be looking for. Quite an action-packed session. So without further ado, I will move us over to the main screens and we can see exactly what's going on there. Now, there we go, that's perfect. So, New Zealand dollar, Japanese yen. Now, first of all, what we need to see is I want to show the strong seasonal pattern. The New Zealand dollar, Japanese yen tends to rise very strongly at this time of year. And you can see that between 25th of November
explaining that these meetings this week
through to the 1st of January, the pair has risen 17 times in 21 years. And if you extend that out even further, and if we, always look at the last 15 years, you can see that's 12 gains in the last 15 years. So there's a very strong seasonal pattern, which is due to some tax loss selling behavior in the Nikkei, and that tends to weaken the yen at this time of the year. Now, obviously, a previous seasonal pattern is not a guarantee that the future one will work, but the Reserve Bank of New Zealand looks very interesting because they are on they're on a rate hike cycle. Excuse me, hard to get my words out this morning. In other words, they're raising interest rates and expected to raise interest rates for the foreseeable future. Their latest projection, in fact, I've got those projections here. Let me just bring that up to the screen so we can see exactly what those latest projections are. You can see this is from the RBNZ's latest decision. Their latest decision is on the right. And you can see that they're expecting to raise their interest rates. Let's see, that's, oh, hang on, I want to get the other one up. There we go. You see, this is the latest RBNZ rate decision on the right. This was the previous one on the left. And you can see they're looking at raising their interest rates from 2.1%, they're expecting it in 2024 in their previous meeting. Now, their latest meeting, they now expect interest rates to be at 2.6%. So it was 2.1% they're expecting in 2024. They're now raising that half a basis point and bringing it forward. So they're expecting 2.6% by the end of 2023. And you can see the end of 2022, they're expecting interest rates to be 1.6%. They're now expecting interest rates to be 2.1%. So basically a 50 basis point rate hike projection has been given by the RBNZ. Now, that does mean that the potential for New Zealand dollar dip buyers is definitely in play, and it's not unreasonable to expect. So we've got some fundamental reasons, and we've also got this strong seasonal pattern. So New Zealand dollar yen upside is very interesting potentially. Now, the reason we've seen downside in the New Zealand dollar Japanese yen as of late is because of this. Let's just get rid of that. So let's, okay, yeah, we'll just we'll just bring up the New Zealand dollar Japanese yen chart. We can just see the New Zealand dollar Japanese yen has been selling off. That's been on those Omicron variant fears. We look at that in a minute. But basically, the worry is that the Omicron variant is going to be vaccine resistant. It's going to be more transmissible, and we'll be right back at square one in terms of dealing with COVID. That's the big fears, and that news broke really Thursday, Friday of last week. So we saw heavy risk-off selling into the weekend. And markets are sort of flat at the moment, sort of quite restrained, waiting for the next sort of headline to break to give us some indication. We'll cover that in a minute. I'll tell you what to look for. But to that New Zealand dollar yen downside, now medium term, we are expecting buys. So this potentially is a decent value area. Now you can see that price has just moved just around that 61 Fibonacci retracement level. So we're also in that 200 exponential moving average, and we've got near-term support around this 76 region. So, you know, a sort of a low-risk, high-reward area would be to enter kind of at market with stops, ideally below 74. So as long as there's enough space there, and as long as the traders aren't too leveraged, that is a decent area to look to enter on a potential retracement. Now, this will depend, obviously, what happens with the Omicron variant. So let's just take a look at markets overall to get a sense of what's going on. Now, the bottom line has been a concern over the Omicron variant. So we saw heavy selling off in the oil complex. And the reason the oil sold off is because if the COVID variant is going to be spreading again, it means that people won't be using oil again. There'll be more restrictions, more lockdowns, and so oil prices can fall. Now, OPEC are meeting this week. They rescheduled their appointment to Wednesday of this week. So they want to wait and see how the market reacts. Now, they were expected to hike production by 400,000 barrels per day. They may or may not do that now, depending on what happens. Now, the bottom line is that this variant is more transmissible. But, you just take a look at the reaction across stocks, you can see that stocks are putting in a little bit of a recovery today. Why? Well, it's because a lot of the so-called anecdotal evidence, from South Africa, is that the cases have been relatively mild. So we can see that the VIX, the volatility index, yes, it did push significantly higher above that 25 region, but then it has moved significantly lower. And if we can start pushing lower in the VIX, then we'd expect to see equity markets keep pushing higher. We have seen a move higher in the MOVE index, which is volatility out of the bond market. So that's not a good sign for risk. But if we start to see the MOVE index dropping lower and volatility dropping lower, that is a better sign for risk. And we may see further upside in equity markets. Now, be aware that a lot of this heavy sell-off last week happened when the US were on holiday for Thanksgiving. And there's a general market maxim, which is you shouldn't really trust a sell-off during a holiday. Shouldn't really trust a big move, breakout moves in markets over holidays. You want more investors to be around to get a bigger picture of exactly what market sentiment is. And this always struck me on Friday. I was covering the forexlive.com website, and this always struck me as a little bit overdone. Okay, this struck me as a little bit overdone. In fact, I'll see if I've got my comments here from Friday, because I was concerned about seeing a buy the rumor, sell the fact response. I'll just have a little look at this. Yeah, here we go. Remember, there's I was sort of saying, is the variant vaccine resistant? Is it more highly transmissible? Is it more or less dead from the Delta variant? With so many unknowns, there's enough to be worried about, but not enough information for either relief or total fear. As a result, we're left with a cautious market heading into the weekend that just wants to be rid of risk. There will be a rapid reassessment next week, and watch out for a turnaround Tuesday. New Zealand dollar yen is at a great place if this latest risk-off moves turn out to be a false alarm. See to the outlook, blah, 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 blah. Right. So in other words, just recognizing that there's so much uncertainty and unknowns in markets at the moment, and we could see a rapid turnaround. Okay, so watch out for a rapid turnaround this week. Now, this is what you need to look for. I put this up on my Twitter feed. I've got a good little tracker here. Here we go. Omicron variant tracker, keep track of the latest moves. And what we can see, and you can see here, that the Omicron variant is already in quite a few different countries: South Africa, Botswana, Netherlands, UK, Israel, Austria, Germany, France, Japan, Switzerland. So we can expect these cases to continue, okay? And we can expect those cases to keep rising. But there's 3 vaccine companies that are onto this. So Johnson & Johnson, Moderna, and AstraZeneca. Johnson & Johnson, Pfizer, and Moderna. Now, Moderna reckons they can have a vaccine out in about sort of potentially 6 weeks. So even if this is vaccine resistant, remember the vaccine companies are quite confident they can get a vaccine out for this pretty quickly. So even that should mean that risk could potentially turn around very quickly. Now, if the headline to look for is this, okay? So look at the New Zealand dollar yen, for instance. If, for instance, news comes out that the vaccine work, say like, Johnson & Johnson come out or Pfizer come out and say, vaccine resistance, the Omicron variant is prevented, 90% prevention by the vaccine. Great. That would be a fantastic recovery in risk. You just see the pair shoot higher. If they said like the Omicron variant is resistant to the vaccine, we'd expect risk to keep selling off. So at this stage, we just don't know what's going to happen. We don't know if risk is going to carry on to the downside or the upside, but we do know that the general view is that it seems to be quite mild. That's what some of the latest talk out of South Africa is, that the cases that have been there are relatively mild. And we did see on the Friday some anecdotal evidence that I was reporting on from the South African scientist Sane, and she said, South African scientists say we've had every indication that vaccines are still preventing severe COVID-19 deaths from variants. Okay, more tests to be done by the middle of next week, right? So, in other words, the anecdotal evidence looks pretty good. That's why we're seeing a recovery in risk markets to start the week, because people think, well, actually, it doesn't seem to be this terribly deadly vaccine resistant variant. It might be okay, and the initial signs are good. But we don't know. But we are seeing a bit of recovery in risk. So we're looking at, is the variant vaccine resistant? How are Pfizer, Moderna, Johnson & Johnson doing? Have they got some new data out? What's the latest information from the World Health Organization? Expect markets to start moving as the data changes. Now, one of the key things you look at for is the US dollar. Now, the US dollar is going to be tricky this week because we have all these variables. Now, if you just take a look here, do you see on the left-hand side, this is the Fed Fund futures, okay? And you can see the Fed Fund futures, they were pricing in 3 rate hikes for June, September, and December before the Omicron variant broke. When that broke, they're now only pricing in 2 interest rate hikes. So the dollar this week is going to be pushed and pulled around by what's happening with the virus. If it's more bad news, then we could get a scenario where we see the dollar falling, but then starts to rise if it catches a safe haven bid. The dollar fell into the end of last week because the bond yields were falling lower. As the bond yields were falling lower on Fed Fund futures expectations dropping, the dollar weakened. If it gets worse, we could see some of the dollar catching a bit on safe haven. So watch out for dollar being pushed and pulled around by the virus. Got a lot of important data this week. NFP, we'll cover that in a minute. Inflation, OPEC, and Fed speak. So there's a lot of moving parts for the US dollar this week. So be very, very prudent of that. Do take a little screenshot of that. Just give you 30 seconds. That will help you with a little bit of research we've done to help you get ready for that. Okay, everyone should have a screenshot of that. You can read through it in your own leisure. Now, in terms of like the overall risk events that we have, very quiet day on the calendar today. Bank of Canada's governor speaking. This is going to be second fiddle to the virus news. So today is all going to be about virus news, particularly vaccine resistance or efficiency. So look out for that. Watch out for Chinese growth story, manufacturing PMI. Now, this will let us know what the expectations are for Chinese growth. At the moment, Chinese growth is expected to slow. If this keeps slowing, that in itself could impact risk. So if this drops into contraction below 50, don't be surprised if that harms risk sentiment. If it moves higher, above 50 or on expectations, then that should be, that risk won't sell off because of Chinese data. But look out for Chinese data. Remember, about 15% of everything in the world is produced out of China. So if China slows down, it impacts the global economy. And then relatively quiet session. Do keep an eye out for European inflation expectations. Expectations that it will be high, but we need to keep an eye on inflation. Any inflation that surges can get markets' attention as well. As long as this stays roughly on target, that's not going to be too negative. But if we see some big misses, particularly to the upside, watch out for that. If it's a big miss to the downside, then we could see further euro selling. Okay, so the best opportunity would be in a miss to the downside, but at the moment, vaccine news is most important. GDP data for Canada, unlikely to be that important today, but Fed Chair Powell speaking will be important, and particularly what he talks about with interest rate hike expectations and in line with the Omicron variant. So watch out for that. Australian data, again, that's going to be vaccine, that's going to be subservient to the vaccine news. Jobs data important. Yeah, Governor Bailey speaking about the pound, that has the ability to move the pound, but remember, the market is pretty tired of the Bank of England because of the last interest rate expectations they've given to markets. They then walk them back. So before the last Bank of England meeting, they really sort of got the market thinking they were going to be hiking interest rates. Then it came to the interest rate meeting and they didn't. So what the Bank of England says now is not necessarily believed by the market. So remember that when Bank of England Bailey speaks. But if he's looking about interest rate hikes, expect the pound to increase. If he's talking back the expectations of interest rate hikes, generally expect the pound to fall. But at the moment, because he was unreliable last time, markets are less likely to believe what he says this time. So just to be aware of that dynamic going on. Now, we also have ISM manufacturing detail. That will be important for the US dollar, but the US dollar is mainly driven by bond yields, and the bond yields are falling because of the Omicron variant fears. So if Omicron variant fears are still around, that will be more important than economic data. If the Omicron fears fade into the background, economic data becomes more important again. And particularly manufacturing PMI, that will be an important data point. If it's above expectations, then expect that to be supporting the dollar and sooner interest rate hikes. If it's below, expect that to be negative, and that should lift something like gold. But the key issue is the Omicron variant. That trumps all other issues for right now. OPEC, due to me, again, they will not be wanting to change production levels if Omicron variant fears are still around, because there won't be much oil supply expected. And then the big event is potentially the non-farm payroll on Friday. Now, I'll show you the best opportunity there will be, but unfortunately, this is now made complicated. And it's made complicated because of the vaccine issue with the Omicron variant. Now, let's assume that the Omicron variant fades into the background. Let's say there's some data that's come out Now this is, I'm speculating, but then this is how to understand the non-farm payroll. If Omicron variant fears fade away, then look at gold, and in particular, look at a weak non-farm payrolls number to really cause gold to surge. And if you just take a look at the strong seasonal pattern for gold, you'll see exactly what I mean. Okay, so if you just take gold and you look at gold over the last, well, let's just say look at gold over the last sort of, let's see, over the last sort of 15 years, you can see that from after the last Federal Reserve meeting, you can see that gold from, say, sort of 15th of December through to like the end of Feb, you'll just see, how strong that seasonal pattern is. Right, 12 times in the last 15 years gold's gained. And if you look at it over 25 years, you can see gold's gained 17 in the last 25 years, and over 53 years, it's 30 times. Now, a lot of reasons for this gold upside is the fact that Chinese Lunar New Year meets, and around this time, the China Lunar New Year, a lot of people buy each other golden gifts. Now, if we see a very weak non-farm payroll, that should weaken the dollar and that should lift gold. So in order for gold to keep rising, we need to see three things, right? And this is what to look for. We want to see, let's just, that should be it. We want to see real yields falling, the dollar falling, and that'll lift gold, okay? So if we see real yields falling, we want to see, so that's inflation rising, bond yields falling, dollar falling, that should lift gold. That's really what we want to see. If you want any insights for trading gold, do check out my trading insights page on my blog. And I have a very, a few tips for trading gold right now. It's the latest article I've done. Do just look at it. I'll put it in the chat box and you can just see how to use that there. So right now, the main issue is all about this Omicron variant and what we can expect. Markets are at the moment saying we're not massively worried. And you can see equity futures markets still sort of trying to track higher. Now, US session will be opening shortly. And let's see how the US investors, they're coming back from holiday, they might look at this and say, what a great opportunity to buy the dip. Or they might be fading the rally. Now, I don't know, but what the headlines I'll be looking for is news on the transmissibility of the Omicron variant, but more importantly, whether it's vaccine resistant or not. Look out for news from Moderna, Johnson & Johnson, and Pfizer. If they have confidence about their vaccines against the Omicron variant, expect risk to recover very quickly to the upside potentially. I'm just going to see if there's any questions. Yeah, Josh, do you think seasonals won't matter as much this year with the variant threat? Yes, if the variant threat is here, then I wouldn't be so looking at the seasonal so much, Josh. Absolutely. What's your thoughts on Aussie New Zealand dollar? Does this pair impact New Zealand dollar Japanese yen longs? Yes, because it's got the New Zealand dollar aspect to it. So obviously, when you've got the New Zealand dollar pair, when you've got the Aussie New Zealand dollar pair, it will impact the New Zealand dollar. Okay. Now, with the Aussie New Zealand dollar, this is the currency pair that is very good for trading a divergence between the Reserve Bank of Australia and the Reserve Bank of New Zealand. Okay. Now, the difficulty with this pair at the moment is that the Australian dollar has been very heavily sold off, Josh. And if you just take a look at latest positioning, I'll just try and find this here. So I'll just show you in the currency research and just show you some of the latest research we just done on the COT report. Now, I don't think we got the COT report out last. Yeah, the latest thing was delayed for federal holidays. But you can see, look, the Australian dollar has been heavily sold. And it's been heavily sold on a number of different issues. So it's been like the worst COVID-19 situation that was in Australia. There was the slowing growth in China. There was this large drop in iron ore prices. And all of that just weighed on the Aussie dollar. Okay, but the problem is, Josh, a lot of that bad news has kind of been almost priced in. So the Australian dollar is very sensitive now to some good news. If we get some good news, it wouldn't be surprising to see the Aussie New Zealand dollar rise higher. Now, with that being said, if the Aussie New Zealand dollar pair like moved all the way back up to maybe like 1.0600 or even better, maybe like 1.0800, I would definitely be selling that rally. But where price currently is, I think the Australian dollar, New Zealand dollar is due a retracement just because the Aussie dollar has been so heavily sold off. You see this time around the middle of this year. Do you see how the pair fell? Well, a lot of that sort of bad news has been priced in now, so it's not a surprise to see a little bit of recovery. So that's what's going on with the Aussie New Zealand dollar. What's the medium-term bias? It's to the downside. Why? The Reserve Bank of Australia is not expected to raise interest rates till 2024. The Reserve Bank of New Zealand is expected to raise interest rates, sequentially until 2024 up to 2.6%. So over, which direction do you expect this pair to go in the medium term? Lower, but I'm not surprised to see a retracement now in the short term because the Aussie dollar has been so heavily sold off. Does that make sense, Josh? Can you see? Like the bearish outlook was like from the middle of this year, but eventually those positions, like everyone who sold has sold. And so there are people either closing their selling positions or maybe even initiating longs. That's where we're at now. So we either need something really bad news, or if we saw some really good news, then we wouldn't be surprised to see the Australian dollar, New Zealand dollar pair retrace. I hope that makes sense, Josh. In fact, I may even have a piece on that on my blog. Let's have a look. Trading Insights. Let's just see if I have. Maybe check out the Central Bank Watch. Maybe have a little look here, Josh. Okay. Yeah, good. That's what you're going to be careful of, because sometimes, now this is easy for retail to do, is you think, okay, I've got my outlook, I'm expecting Aussie New Zealand dollar downside, yeah, which makes sense, right, Josh? That is right. But if you're late to the story, then even though you've got the right direction, you might find the Aussie New Zealand dollar rallies up to 1.0800 before selling back off to 1.0400, and there's a new story, okay? And you might say, well, if I've sold down here, you might still be 100, 200 points in drawdown. Do you see? You see the difficulty? So get to the stories early. Look for the stories as they develop, and then it's a lot easier. So if you were back here, like saying to me, and I was selling Aussie New Zealand dollar around the middle of this year, right? If you were here saying, oh, I've got a sell bias for the Aussie New Zealand dollar, I'd be like, yeah, great, Josh, that makes a lot of sense. You can just pop your stops above the 200 exponential moving average and look for a move down to that near-term support level. But because you come into this party quite late, what the Aussie New Zealand dollar pair is vulnerable to is good news now. Any good news, and you might see the Australian dollar rallies rapidly higher. But it's still a sell on big rallies, right? So if you get some bearish price action around 1.0600 or just a move up to 1.0800, I would expect sellers as the current market condition is. Josh, I hope that makes sense, mate. Yeah, good. Excellent. Okay, folks. Well, that's come to the end of our session. It's all about the Omicron variant. That's what we need to look for. If we suddenly see good news that the vaccine is effective against the Omicron variant, expect a sharp retracement in risk assets. Keep an eye on gold. If we get a very weak non-farm payroll, but the Omicron variant fears have faded, we could see a decent upside in gold. Look out for the risk-sensitive pairs like the New Zealand dollar, Japanese yen, New Zealand dollar, Swiss franc. If we see a risk rally return, these offer good value with stops can be placed just below 74 or even just below 6,200 or 6,100 here in the New Zealand dollar, Swiss franc. Folks, you're very welcome, Royden. Anytime Mondays, I'm always here, Royden. Come along. Any questions, use the Q&A box. And if I can answer your question, I will give any answer to any question that anyone wants. I love to help folks track their way through the markets. So do come back anytime. Nice to have you. Take care and have a very good rest of the day, everyone. Goodbye now. Thank you. Goodbye.